Hey everyone, welcome back to the Finance Fix with Timut. RBA cuts rate. So, what does that mean to ASX and your money? In a nutshell, the RBA cut interest rates by 0.25 percentage points, bringing the cash rate down to 3.85%. That means borrowing money is now cheaper, which usually encourages more spending and investing. After this news today, the ASX, Australian share market, went up. The main index, the ASX 200, rose by about 0.58%. Investors were very happy because lower interest rates can boost company profits and make shares more attractive. Sectors like technology, property, and telecommunications did really well today. For example, tech companies like Xero and WiseTech saw their share prices go up. Even Telstra gained after announcing price increases. On the flip side though, the Australian dollar dropped slightly because rate cuts usually reduce the return investors get from holding Aussie dollars. So, what do you think is the main reason for RBA to cut rates? This is mainly because inflation has dropped to more normal levels now. So the RBA is trying to help the economy grow by making loans cheaper. Another good news is that the RBA has also hinted that more rate cuts could come if needed in future. All four major banks still predicts another 2 to 3 cuts for the remainder of the year. That's very good news. What the RBA rate cut means for your money. This means borrowing gets cheaper. If you have a home loan, car loan or business loan, your repayments could go down, especially if you're on a variable rate. More cash in your pocket. However, rate cut means a red light for your savings, as savings account interest is also going down and earn less interest. If your money is in a savings account or term deposit, you might earn less interest. Good for borrowers, but not great for savers. Due to more money in pockets now, investments can grow. Lower rates often boost the stock market because companies can borrow more cheaply and investors look for higher returns. Shares, property, and even super funds can benefit. But not so good for the Aussie dollar, as I explained before, as this might drop. A rate cut usually makes the Australian dollar weaker, which affects import prices, travel, and online shopping from overseas. Overseas holidays get pricier, exports become more competitive. I hope this gave you a better understanding of the RBA's rate cut in a nutshell, what it is and how it impacts everyday Aussies and investors like you. If you found this helpful, don't forget to like, share and subscribe to the Finance Fix with Timut. Thanks for watching and I'll see you in the next video.